Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Bull versus Bear webinar on TGI. Thank God it's Friday, the 6th of June. Welcome to all the trade day team. We're going to go through our regular run through here today. It's going to be a fairly brief webinar, not a huge amount to say, but we'll go through everything we need to go through. Take a look at the calendar, what we had, what we've got coming up. Take a look at the major news wires, what are the geopolitical central bank, the data-driven events that are shaping financial markets right here, right now, and a quick look at the charts to see what's going on the charts. First of all, just take a look at what we've got coming up. I mean, all eyes on the main data for the week. The US employment report. Remember, it's not just that headline non-farm payroll number that we're looking at in here, which the market is expecting around 126,000. Also keeping an eye out for average hourly earnings. Also keeping an eye on the unemployment rate in here as well. So keep an eye on all of those going into today. And with the standout piece of data, the 126,000 expected for non-farm payroll release. We do get Bowman speaking today as well from the Fed, 10 o'clock Eastern. So remember that data coming up in just 1 hour's time. The only other thing to mention regarding the Fed is, I've been mentioning this all week, Fed about to go on their blackout period. So today's the last day for Fed speakers to talk about monetary policy as they go into the blackout period ahead of the 18th of June decision on rates, which we are expecting as no change. Just going to jump up to the FedWatch tool actually. So no change you can see in here priced in for June. In fact, very little chance for a cut in July, but a slightly increasing chance. 67% chance was still unchanged in July. Most likely getting a rate cut only. So 70, whatever that is, 76% chance say that we do get a rate cut by September, and by year end, market pricing in most likely 2 rate cuts, but potentially up to 3 rate cuts. Outside of the data focus on the employment report today, the main focal point has been on this Elon Musk and Donald Trump, probably the inevitable divorce between the two powers. And so that was really blew up quite nastily yesterday on social media. There seems to be potential for them to maybe bury the hatchet on that as they're leading with here, heading towards a detente, and nothing is quite certain. Musk signals open to cooling tensions and backed off on a threat to decommission SpaceX's Dragon spacecraft. White House has scheduled a call with Tesla CEO with Musk. So, not pleasant to watch on social media. Probably inevitable. People were just waiting for that to happen at some point. Probably a bit more aggressive than expected. Tesla got smashed yesterday on the back of it, 14% down. It has rebounded in pre-market trading, but not got all of those losses back in here. So we'll see how that rebounds further, potentially going into the day. And certainly saw it put a slight negative spin on the overall indices yesterday. Tesla dragging down really the overall indices to some extent in here. Musk signal is open to cooling off period in Trump through to more on that. US futures and Tesla up on easing Trump-Musk rift in here, coming out of Bloomberg. And again, so it's the same headline there. I've got that one twice. And then Wall Street futures edge up ahead of the jobs report. Tesla rebounding. It's all really the same stuff. European shares also steady ahead of the key US data report going in today, and stocks on guard for US data. Tesla shares claw back ground pre-market. So all the same stuff. Tesla rebounding, market slightly better in here. They sold off yesterday a little bit on the back of that spat between Trump and Musk, but rebounding going into the day, and now all eyes on the data in about just under 1 hour, about 55 minutes time. If we look at the overnights in here, we have 0.5% up on the Japanese Nikkei and basically 0.5% down on the Hang Seng, reflecting the Chinese markets. European stock averages and the bourses are pretty much unchanged going into the day. UK FTSE is pretty much unchanged, as is the French CAC, slightly down on the German DAX, 0.2 this morning, and US futures are actually slightly rebounding after the move lower yesterday. around 4 tenths higher for both the S&P and Nasdaq going into today. On the bond side, the bonds did move significantly to lower yields over the last 24 to 48 hours, but a slight recoil back higher. But nevertheless, the risk is for lower yields, and on the price side, still looking bullish on price with those bottoming patterns going in, head and shoulders bottoms and reversals of trend lines. So right the way across the yield curve in here, we're looking at potential higher prices, lower yields. And stocks did move up to recent highs in here over the last 24 hours. Did just pull back from those, but as I said, rebounding this morning. So we see that we did pop up to the highs yesterday, sold off into the latter part of the session on concerns about that Trump-Musk spat. But you can see in here the ES holding above this 13-period moving average hasn't closed below. Actually, just dipped below it back here, back in the late part of May. But pretty much been holding above this 13-period EMA, just dipping below and flirting with it, and then down close to it yesterday and overnight, and then rebounding off that 13-period EMA. And a similar story here on the Nasdaq. You see flirting with it, actually not closing below it on the Nasdaq. You see flirting with it over the last 2 weeks, but holding above that 13-period EMA, down right close to it yesterday, and then going into this morning and in early trade today, but then rebounding from it. So getting back a lot of those losses from yesterday already for both the Nasdaq in the US, which were driven lower again by the sell-off in Tesla on the back of the Trump versus Musk social media trade. So markets are back on the positive in here going into today, pointing to the upside into the employment report. Real risk that we go and look at the highs and take out the highs that were posted yesterday. I think and they're the more recent highs. Don't think we're going to get it up anywhere near up here to where the highs that we posted back earlier this year. Don't think we're going to be seeing those today, but nevertheless, we could be seeing new short-term highs back above yesterday's high, potentially going into today. But that's all going to be on how this employment report comes out. Remember, and actually a slightly weaker report might be positive. So I think if we get a slightly weaker or slightly stronger report, that'll probably be positive for the market. A strong report shows that the economy is resilient. A slightly weaker report then, I think it's only slightly weaker, I think would be seen as a positive because it will give the room for the Fed to potentially cut rates. So I think we're in a kind of buy and dip if the market is around on this headline number, non-farm payroll number, around 126,000. So somewhere between 100 and say 10, 140, I think the market either dips and bounces or just goes straight higher. If we get a very strong number, then the number will probably be higher. The market will probably be higher. A very weak number, sub 100,000, will probably be disappointing, and we'll see the market actually sell off. It could bounce after that, though, again, because there'll be a shift of focus to, well, they're just going to put the Fed in play for an earlier rate cut than expected. But a 2-weeker number would be probably disappointing and see markets overall lower. But I think a slightly weaker number could actually be positive for indices. So, all eyes on that data, which we have now in 52 minutes. So, that's going to be critical for today. All right, guys, I'm going to leave it there. I'm going to wish you all a great TGI Friday. I'm going to wish you a great weekend too. Take care, stay safe, and have a great trading day. Bye.